Good afternoon. This is Oliver Slow, Blue Line Futures, coming to you from the Chicago Board of Trade. Today is Thursday, May 15th, and we've got another kind of grind higher in the equity markets into the afternoon session after a softer overnight trade. We talked yesterday about maybe the momentum slowing a little bit, which was apparent overnight, but finding their legs again and moving back to the upside end of the afternoon trade. But really a lot of the action has been in the outside markets, or the other commodity markets, I should say. And we'll take a look at gold and oil from Phil Strebel and Dan White here in a little bit. But before we get into that, I want to touch on the grain market. Saw some volatility in that market. Grains mostly mixed. Beans under very, very heavy pressure. There were some biofuel headlines and rumors last night that sent that market lower. And bean oil, which is the big one there, was lock limit lower through much of the day. And looking at the options market, you're able to find a synthetic trade on the futures, which was another 2.5% to 3% lower there. So we've been optimistic on beans, but the headwinds from bean oil could be a little bit too much to overcome here in the near term if we continue to see weakness in bean oil. So it started neutralizing a little bit of that bullish bias in soybeans here in the near term. Longer term, I still think that we can probably chew through these headlines and continue to see some more premium put into the market. But here today, with the weakness in bean oil, beans really didn't have a choice but to trade lower. So tread lightly there. On the other hand, July corn held really, really well these last couple days, but I think wheat was the real winner here recently. We've gotten 3 consecutive higher closes, which is like the longest streak in forever, which is kind of sad, but constructive after posting new contract lows 2 days ago. We reversed higher, finished the day higher, saw some follow-through buying yesterday and again today. Now we're approaching resistance at that 20-day moving average near 535. Mentioned yesterday, talking about the potential upside. Matty Candlesticks laid out the technical backdrop for that market, and I mentioned looking at the options market as a good way to find a limited risk way to get some upside exposure in that market. Started working with clients in that today, looking at the August options, which trade off of the September future. So if you have any interest at all in learning more about what we were looking at, give us a call. Our trade desk is willing, ready, and able to help, and we can, if that particular strategy doesn't work for you, we can find one that is suitable for you. Cattle. Huge move yesterday, another huge move today. But before we get into that, I will kick it over to Philip Strebel, get a quick update on what happened in the gold market after a sharply lower overnight trade, and then back to positive territory today. Phil, take it away.
Thanks, Oliver. I'm Philip Strebel with Blue Line Futures, and we had a real nice recovery in the precious metals markets after gold fell to an overnight low of 31.2330. The precious metal had recovered its earlier losses after PPI, that's the producer price index, it unexpectedly cooled. So what PPI is it's a leading indicator for consumer inflation, something that everyone's watching, because if inflation comes down, then perhaps the Federal Reserve can cut interest rates. Now, when producers charge more for goods and services, those higher costs are usually passed on to the consumer. This also works conversely. So you look at last month here, we had positive 0.4%. That was the core PPI number. The forecast was for a slight decrease in that number. And what we ended up having was a significant decrease of minus 0.4%. So those input costs came off quite a bit. Now what you do is you take that to the CME's Fed Watch tool and you start looking at some of the months where there's expectations that the Fed could cut rates. So if you look at the July meeting, you go to yesterday, there was a 65% chance that the Federal Reserve will leave rates unchanged. Now that's edged lower to a 61% chance. You take that to the futures markets, and what you look at is the dollar index, which is a bit weaker. You look at 2-year Treasury yields, which have come off significantly. We were at 4.03%. Now we've come down to 3.94%. That big slide lower gives gasoline and some fire behind that gold market, and that's how gold futures are about $100 off of their overnight lows. So I'm taking it back to you, Oliver, and thanks for having me on.
All right, thank you for that, Phil. Great analysis, as always. A big reversal from that overnight trade back into positive territory, which leads me to believe that we could potentially see some more follow-through momentum to the upside here as we inch into the end of the week with weekend headlines potentially unknown. So gold flying around, potentially setting up for us to settle into a little bit of a trading range at some point here in the next couple of weeks, which could present some opportunities for traders on both sides of the market. But speaking of reversals, yesterday we talked about the big reversal lower in live cattle, feeder cattle, after making new all-time highs, reversed and finished lower, aggressively lower on what was really heavy volume. And we talked about that yesterday and in our morning note this morning to clients. If you do not get that emailed over to you, you can sign up for a free trial over at bluelinefutures.com. It's also posted in the portal. We talked about the open interest. A lot of people thinking, oh my gosh, the open interest must have gotten crushed with a bunch of long liquidation. But the big caution flag this morning was looking at that open interest and seeing open interest actually increase, which means there were more new short bets open than there was long liquidation. That is very, very bearish in my opinion, and that's part of what I think we saw today was follow through on top of that. So you got bearish technicals, bearish money flow, really keeping a lid on things despite a firm and fundamental backdrop. We heard rumors of cash trade in Texas, 218, potentially up to 220. So the fundamental backdrop is still there, but the futures market thinks something is up. Which one is going to win out at the end of the day to be determined. We are approaching expiration in May feeder cattle and June live cattle, still about 2-3 weeks away from going into delivery there. So something to keep note of. If we do see some weakness come into the market, you would think that those front months have enough of a fundamental backdrop to at least outperform some of their deferred counterparts. So how did they finish today? Let's take a look at things real quick. August live cattle, that was the most actively traded contract today. That was down $3.52 to 205.85 over to feeder cattle. Aggressive selling again there with the most actively traded August contract down 6.15. So a lot of heavy selling pressure again. Does not really bode well as far as a technical basis going into the end of the week. So I wouldn't be surprised to see continued pressure there. At some point, I'm sure there will be a buying opportunity, but we've seen this before where we get these sharp sell-off in cattle. And again, I mentioned it in yesterday's video. Over the last 4 or 5 years, it seems like some of these biggest pullbacks that we've gotten in the cattle markets have come on the back of really very little fundamental change. So that is something to be cognizant of. The market can do goofy things despite the fundamental backdrop, especially in those deferred contracts where there's so much time on them that things can change in that time. So that's how the livestock finished up. Lean hogs, a little bit less exciting. It was up on the day. June lean hogs settled out above 100. They finished at 170 cents. That was up $1.85 on the day. Crude oil has been moving around. I am not the energy expert in-house. I do like to keep an eye on it and trade it occasionally with clients. But for more insight on that, I will toss it over to Dandy Dan White for an update on the energy markets.
Hey, Oliver. Dan White with Blue Line Futures here. I'm going to give you a quick rundown on crude oil for the week. So over the weekend, as everybody knows, we got the U.S.-China 90-day pause at the elevated tariff levels. That really propelled crude higher Sunday night through the early part of the week, where we saw crude oil really being a leader in the commodity space. A lot of that was tied to more optimistic, macroeconomic forecasts with the pause in the elevated tariffs. Crude oil demand and macroeconomic health really correlate highly directly. So the demand forecasts and hopes really improved with this pause. Outside of that, we had a miss in OPEC plus April production levels. So the acceleration of OPEC plus output hikes is really supposed to start in April and then accelerate even further into May and June. July is still in question. But the actual April production levels came in a lot lower than expected for OPEC. So that added to some bullish, positioning. And then outside of that, yesterday we got a tightening of Iran sanctions out of the Trump administration. And today we had positive comments on renewed hopes for an Iran nuclear deal. So a flip-flop on Iran sanctions. Outside of that, EIA report was fairly bearish yesterday. We saw large builds in crude oil inventories, and we really saw a sharp slowdown in U.S. crude oil exports. So that gave traders some pause as these tariffs really start to bite in to our export competitiveness. Outside of that, the technical picture, we had a failure early in the week at our longer term pivot pocket at 63.51, 63.81. And largely our take on the technical situation is that our price target has been hit. We closed out, the majority of our bullish bias Tuesday afternoon, Wednesday morning. And from here, we're kind of just sitting in the pocket. We're going to wait to see how the news flow develops. Going to wait to see how kind of the chart goes from here, where it consolidates. And we're kind of just sitting, waiting for the next opportunity. Thanks, Oliver.
All right, thank you for that info, Dan. As always, it is greatly appreciated. And I know you and I were talking about oil in the office yesterday, kind of ratcheting back that bullish bias more into a neutral territory for both fundamental and technical reasons. So kind of a wait and see in the energy complex and a trader's market where, in my eyes, you wait to buy it lower or you wait to sell it higher. Right here in the middle of the recent range, it doesn't feel like there's a whole lot of conviction in either direction. So wait and see in the energy complex is the theme, but a lot going on in the other markets. Again, we post a lot of this content on our portal on bluelinefutures.com, and we also email out updates on our research each and every morning covering a wide variety of markets. So if you have not signed up for your free trial of that, head over to bluelinefutures.com. Get yourself signed up for the free daily commentary covering everything from grains and livestock to precious metals and energies and much, much more. On top of that, our portal is updated several times throughout the day, so you can check for live updates there. Again, this is Oliver Slope, Blue Line Futures. Appreciate you listening in this afternoon. We'll see you next time. Remember, trading futures and options involves substantial risk of loss and is not suitable for all investors.